SoFi CEO Anthony Noto did have a talk with an analyst of Bank of America a couple of days ago and provided some useful information for SoFi investors. So I want to touch on that. I also want to address the Robinhood versus SoFi question or debacle that's going on right now. I remember I talked about Robinhood a while ago when it was at $8, $10 or so, did some live streams and spaces on YouTube and X. Stock was $8, $10. Nobody was really interested in Robinhood. Everybody was still saying in the comment section, oh, who's going to use Robinhood anymore after that GameStop drama, blah, blah, blah. Well, I guess when you offer the best-in-class products and experiences, I guess a lot of people will use it. And as you evolve the business, more and more money flows in, and the business just grows and becomes bigger and bigger. That's why it's now a $50+ billion company, and that's why the stock is now at $60+ So congrats to all the Robinhood shareholders. But what I've been seeing more recently is, of course, Robinhood much better company than SoFi, because look at the stock, right? And while it's true that Robinhood has outperformed SoFi by quite a lot, SoFi is still up over 80% year on year, right? So let's not freak out about but look at the year-to-date performance. Yeah, what? It's only down 1.3%. I'm like, okay, who cares? If I can accumulate more and more shares of this business, which is doing extremely well and will be doing even better in the future, who am I to complain? Plus right now, market cap-wise, $16.6 billion or so. I think there is a lot of upside left, quite a lot of upside left. I'm not saying it should be going to $50+ billion tomorrow or next month, just like Robinhood. No, remember also with Robinhood, you have maybe more of a global play. With SoFi, it's more of a US focused play. But I'll touch on that in just a second. If you enjoy these type of videos, hit all the buttons. Would really appreciate that. If you're a SoFi or Robinhood shareholder, let me know as well. Maybe you own both. Like Tanner from Future Investing. He basically owns the whole fintech market at this point, right? So let me know down in the comment section below. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I do first want to show you a couple of things, two things from Robinhood's latest earnings report. So first of all, first ever quarter where revenue was above $1 billion. So that's huge for them, huge growth. I mean, quarter over quarter and even year over year. Why is that? Well, just look at transaction-based revenue, right? When you are a brokerage, this is basically one of your huge advantages, especially during bull market. So that transaction-based revenue basically exploded. And if you look at where that happened or why that happened, well, just look at the crypto. Just look at the crypto segment. Huge increase quarter over quarter. Now, is it sustainable? Remains to be seen, but this is definitely something that Robinhood has for it right now that SoFi does not, right? Is all of that crypto, of course, crypto is non-existent for SoFi at the moment, could definitely change in the future. But when you look at the transaction-based revenues, when you look at investing, trading and stuff like that, you cannot tell me that Robinhood isn't just so far ahead of everyone else. But again, this can also open doors. This can be opportunities for a company like SoFi. But as you will see from the discussion with the CEO, SoFi has priorities. And I know that a lot of people will not like what I'm about to say and share, but this is the reality. I think SoFi management has the data to back their decision up. And eventually they will offer options and all of that. But we'll talk about that in just a second. So first of all, I wrote down a couple of things here on X. You can add your own comparisons here. So Robinhood market cap $57 billion, SoFi $16.6 billion. One has revenue of $2.95 billion, the other $2.64 billion. One has a global opportunity, the other is more US focused. Robinhood benefits from crypto trading, the other might be in the future. One doesn't have a bank, the other has a bank. One is retail investor friendly, the other not so much at the moment, right? This is very true. I mean, Robinhood yesterday during the earnings call, we had Amit, we had Tanner, we had Roy asking questions live on the earnings call. That's pretty awesome. Hopefully they do that more, and hopefully more companies do that as well. Of course, you have to choose your retail investor because you don't want to have the usual questions that we see sometimes on sale, like, oh, when dividends, or oh, when this, when that. So of course you have to be picky, and I think they did an excellent job with that. One runs on Galileo and the other, well, owns Galileo. The other thrives in a bull market and the other does well even when it rains, as we've seen in the last couple of years. Even when SoFi's core business back then was supposed to be destroyed, they performed quite well. And then, of course, the stock's performance, one is up over 400%, the other one is up 90% or closer to 90%. So, okay, if you just look at the stock's performance in the last year or so, you might think that Robinhood is just so much better than SoFi, but I do still think that SoFi, the current market cap, the price that you're paying, the opportunities ahead, I think we will be smiling not that far away in the future. Now let's touch on a couple of things that were mentioned during that conversation. So first of all, they touched on the 2025-2026 targets. Of course, for 2025, right, that guidance was a disappointment, but then for 2026, it was still the same guidance. He said that despite not raising the 55 to 80 cents 2026 EPS target range, they're more confident than ever in achieving it. He also reiterated expectations for 25% EPS growth in the years beyond 2026. So again, I will keep repeating this again and again to make sure that everybody is calm and has the right expectations, right? As long as those things do not come down, right? The expectations do not come down, right? We're not now at, 50 cents or 45 cents, or then EPS growth after 2026 is now lower to 20%. There really is zero reasons for me to change my mind. And for anyone that will tell me that, should be priced as a bank doesn't grow this fast. I'm sorry to say, a bank doesn't grow this fast. Again, SoFi is not a bank, SoFi has a bank. I hope this is clear. And this is also what Anthony Noto has said. Then, with regards to the disappointing part of the business, the tech platform. So Anthony Noto said he's definitely not happy with the way these things have evolved and grown, but he said the following thing. He reminded us that the company closed the Technisys acquisition right when regional banking turmoil broke out and heightened regulatory scrutiny unfolded. This happened right as it shifted from a fintech focus to prioritizing established banks and consumer-facing institutions with large member bases. This was a double whammy for sales cycle elongation that SoFi is still dealing with. He also said that SoFi is still in the running for the large bank deals that they've spoken about in the past, but they're just taking longer than planned. It's basically, he called it, I think they called it, or even Plate called it, that this is a fintech winter. Hopefully we're going to enter the summer towards the end of the year, going into 2026. Because remember, they did announce 3 deals last quarter, but they also said that the implementation and the integration cycles will be gradual and the revenue impact will most likely be in 2026. So yes, it's true, these things take time, take longer than expected. It's not really SoFi's fault, but as we see from these announcements here, once we get to 2026, in 2026, we're going to see things accelerate and quite quickly. They also say here, point 3, we have signed a leading hotel rewards brand for our new co-branded card program launching in the first half of 2025. This is a new differentiated offering that will expand our footprint among consumer brands. Well, if you use the platform that I'm using, Koifin, link is down in the pinned comment as well, you can search for certain terms and it basically scans all the transcript. And guess what? Boom, a hit here. SoFi was mentioned in Wyndham Hotel and Resorts earnings call. They said the following. We also recently finalized an agreement to launch a co-branded debit card, the first of its kind in the United States hospitality sector in collaboration with our new partner, Galileo Financial Technologies, a platform owned by SoFi. The innovative product is designed to tap into the $4.5 trillion debit card spending market, providing our loyalty members an alternative solution to earn Wyndham reward points on their everyday purchases. We expect the debit card to be available within our digital ecosystem by the peak of our busy summer travel season. So, okay, now we know, and this is just the start. If this is something that works out, the partnership works out, I will be very surprised if other hotel chains will not try to do the same. Then with regards to the priorities, right? So, okay, we've talked about maybe a refresh of the SoFi app, the UI, UX needs to change, right? Maybe go closer to something like a Robinhood, very, very easy to use. We've talked about the features, the products that people are asking for, right? The level 1 options. So he said the following: "Note to address complaints from some delays to rolling out level 1 options for SoFi Invest. This isn't a byproduct of slow innovation, but priorities. Again, SoFi has more growth opportunities than it knows what to do with and wants to stay over a 30% incremental EBITDA margin, which by the way in 2024 they were above 40%. This means it has to make constant trade-off. Should they create a level 1 options product for a small subset of members yearning for it, or a SoFi Plus subscription offering immense value that millions could benefit from using," right? So I think they know what's best for the majority of their members. Of course, if they could, they would be doing everything at once. But them focusing on a SoFi Plus subscription would make more sense for them because they probably know what's best for the members, financially, economically, whatever you want to call it. I think going that way makes more sense. And then eventually that options trading thing will be enabled on the platform. But it's about priorities here. So they'll do one thing first, and then they'll just go down the list of things that they want to do or that members have asked for before. And then the last thing here, personal loan market opportunity. So over 80% of SoFi personal loan borrowers are consolidating credit card debt. SoFi doesn't see its opportunity for this product as the personal loan industry, but the multi-trillion-dollar credit card industry. The company will continue to iterate and add new offerings here to create value for customers struggling with expensive credit card debt. More products like temporary interest-only personal loans are probably coming soon, which basically means you only pay on the interest and not on the principal. Again, they are here to make sure that you get your money right. So if they can make sure that their customers are struggling less while at the same time making it financially feasible for the company, right? Because they still need to make a profit somehow, right? They will try to do this. SoFi thinks there are large chunks of outstanding revolving credit card debt that it can very profitable originate while cutting payments in half. And now with the lending platform, which of course is asset light, less risky, it can go and pursue all of this potential credit without stressing out capital ratios or taking unwanted risk. It loves this style of credit origination as it's very asset light with locked-in pricing. These are not like forward flow agreements where pricing can be renegotiated on the fly if benchmark rates move. And this is something that Anthony Noto have kept on saying time and time again. Fee-based revenue, asset light, less risky, that's the way that they're going to go. And to be honest, why not? Why not, right? The loan platform business is growing extremely quickly, super high margins, so why not focus on that, right? I know everybody has been focused for some reason, the tech platform. The tech platform, as I explained in the previous video, the tech platform is still a small part of SoFi. Yes, in the future, it can become huge. But let's not forget about the other sides of the business, the other segments of the business that are performing quite well. And then the new parts that suddenly pop up and are growing extremely quickly, right? A year ago, we didn't talk about the loan platform business, but now we are. So that's a pleasant surprise. So I think we should focus on what we're having right now, what's still in the pipeline, and trust in management because they have been executing extremely well. And yes, of course, when you look at the other stocks in the market, always comparing with other stocks in the market, other people, etc., then you might be disappointed and you might want to keep on chasing. But remember the end goal here. You compete with the market. You don't compete with another stock or another investor unless you have a bet or something like that. Your goal is to outperform the market. And if you think that holding SoFi is the one that will outperform the market, then so be it. Of course, yes, there are many other stocks out there that are doing extremely well, that are up 50%, 100% already year to date, or triple digits in the last couple of months. Yes, it's true. But so what? If your stocks in your portfolio are performing well and are going to outperform or have already outperformed the market, why complain? We will always want more and more, right? It's just human nature. But it is what it is. If your company is outperforming, if you're up, if the business is doing well, why complain? Focus on what you're trying to do. Don't focus on what you could have done maybe in the future. If I had this, if my grandmother had wheels, she would be a bike. You know this saying. So focus on what you know. SoFi, to me personally, has become a bigger and bigger position in my core portfolio and in the public portfolio as well, because I do think that we are going to get our day in the sun pretty soon. And if the market wants to underprice or still not convinced that SoFi is going to be a huge success, so be it. Then I'll just accumulate more and more. As long as they execute, as long as they prove the market wrong, I will not complain. So longer video than I thought it would be, but hopefully a good one. So yeah, like, subscribe, and I see you all in the next one. Bye bye.